What's going on, guys? Matt Wacek coming at you with another video. Today's topic is a bit different than what we normally share here on the channel. A lot of my content is all about digital marketing, and in specifically building websites, ranking them in the search results for local keywords, monetizing those sites with pay-per-call affiliate offers, where we work for a company who works with other companies that want to purchase leads for their business. So these companies may be water damage contractors, plumbers, lawn services. The list is really endless. And so what they do is provide us with phone numbers where we generate traffic to our websites. When someone makes a phone call from our website with that particular phone number, and then that phone call reaches a certain duration, then we get paid for bringing that lead to that business. You can also cut out the middleman and rank a site and then communicate with a business that is in that niche, whatever it may be, and you basically will then sell those leads directly to that company. We'll take on those types of businesses as clients, build them a website or do their SEO for them, and then charge them a monthly rate for providing that service. Today I want to talk about something that every one of you that is watching this, if you're interested or if you're running a business, that's going to affect you, and that is business income taxes. There's also sales tax, which I'm going to cover in a later video, but you really need to know how this stuff works. That way you can anticipate what to expect when it comes time to do your taxes. So this will primarily apply to those in the US. I'm sure in other countries it's probably quite similar. But first off, also, before I get into this, I'm not a lawyer, I'm not a CPA or certified public accountant or licensed accountant or licensed financial advisor. None of this is legal advice, none of this is official financial advice or any of that stuff. This is just based on my experience with what I have done in the past 8 years of business ownership. Now, with that said, business income taxes are relatively simple from looking at it from a 30,000 foot view. If you're working with a CPA, which again I highly recommend you seek out, they're not that expensive, however they're not cheap either for a good one that's going to understand your business, because there's a big difference between going to someone at like H&R Block that just works with regular people that work a job where the money just goes straight to them and their taxes are taken out, so the money is taken out before they even get it. When you're a business owner and you have your customers over here that all pay you, whether they're buying services, they're buying products from you, or it's an affiliate network or affiliate offer that you did, whatever that money is sent to you, you are operating as your own entity, and you need to account all that money that's coming in. So that's why we do accounting, that's why we do bookkeeping, that's why we want to use a company like QuickBooks to keep track of your income and all of your expenses, so that way at the end of the year you know how much money you made and how much money you had to spend on your expenses. So all that money is coming in, and actually let's change that color. So there we go, a little bit more vibrant color there. So all that money is coming over here to you, and we are definitely smiling because we're an entrepreneur making money. We're definitely happier than that guy who has to go and punch the clock. So when you have all of that money come in, so let's say you made $200,000 in a full calendar year in gross revenue. So if you're selling a service to businesses and they paid you through PayPal, that 3.5% fee or whatever it ends up being, that is not just like money that disappears. If someone pays you $1,000, you received $1,000, but you paid out 3.5% of that immediately to PayPal. So you need to make sure you mark those expenses as well. Either way though, PayPal is going to give you these financial statements to make this really easy. I still would recommend using something like QuickBooks to track all this. So, all right, let's say we had $100,000 that we had to spend in expenses, whether it was to subcontractors, to design fees, or buying PBNs, buying sites, hosting, everything that goes with it, advertising. Let's just keep the number and square and really easy to understand. So we cleared $100,000 profit on the year. It's now safe to assume you would probably need to pay in about $35,000. So again, we had this all come in, that $200,000 that came in for the whole year. We spent 100 on it, 100 of it on expenses related to the business. That's what's left. That's what we have to pay taxes on. Say you're doing drop shipping or something and you had a similar type of thing here. You had $200,000 come in at your store. You had to spend 100 between product costs and advertising, and I know that there's specific laws in regards to the actual products. Consult a CPA to figure that out. I don't do drop shipping, so I don't know any of that stuff. But either way, let's say you profited 100 grand. That 100,000 that's left, that's what you're going to be paying income taxes on, just like this guy over here who has the regular job where he made his, let's say it's, I don't know, 75,000 for the year. He probably would pay 30% in taxes. So he doesn't have to worry about this come tax time because his employer does that for him. But say we have 75,000 and then 30% of that goes away, so he takes home about $52,500. And our tax rate between federal and state, we'll estimate it at 35%, just to keep the math simple. So what you have to do by the date, usually of April 15th or sometime right around that, you would end up having to write out a check to the state government for that appropriate amount. Let's say if it's 15%, then that would be 15 grand, and then the remaining 25% for federal, or vice versa. It's probably going to be higher for state than federal, but you'd be writing out a couple checks for that total right there, leaving you with $65,000. And hopefully that makes sense. Hopefully you have an idea now of how this works. I see lots and lots of comments all over that people are really uninformed on this, and it's something that you really need to be well versed on when it comes to running a business. Otherwise you're going to have things really goofed up in regards to your books and your taxes and all that. So one thing to note is you want to budget for this, because let's say you have cash flow that slows down or something like that, and we file our taxes like maybe mid-February or something like that, and we figure out, okay, holy shit, I have 2 months to come up with 35,000 extra because we spent this 100 grand on whatever, fun or living life or whatever it is, because we were balling because we did 200 grand in revenue. And I know of some people that live like that. Then all of a sudden, holy shit, by April we got to pay that. And then you're kind of scrambling, trying to figure out how you're going to be able to come up with that in another 2 months. And so here's a way that you can set yourself up to budget accordingly, so that way you don't meet with your CPA and realize, holy crap, how am I going to come up with this in a month or two or something like that, because that's not a fun spot to be. So what you can do is whenever somebody pays your business, so whether it's an affiliate commission, selling services, whatever it is, you take, I don't know, we'll say 30%, depending on what your expenses are, of course, but just budget maybe 30, 35, or even 40%, depending on how much volume you're doing and what your living expenses are in regards to your rent and your food and that sort of stuff. Obviously, you don't want to be living above your means. You want to be able to live good, but also reinvest as much as you can back into your business. That's what's going to allow your business to grow, so that way you then can start living extravagantly, but you're still never going to be living beyond your means, because you don't want that. So set aside, I don't know, 35, maybe even 40% of what you take in, depending on, again, your expenses. If you have a lot of ad costs or a lot of overhead, this number might be a bit different, but take 40% and you could just set it in a savings account and don't touch it at all. Just unless it's an absolute emergency, you absolutely have to have it for something, car breaks down, whatever, just leave it there in that savings account, because then when the following year rolls by, you do your taxes and you realize that, okay, I have to pay in roughly $30,000 in income tax, for example. So let's say we had built up 50 in here and we just let it sit. Then when we find out that, okay, we only have to pay 30 of that, or 35 of it, or whatever it is, you're left with a nice surplus of what you could technically call a refund, like what most people do. They get their tax refund because it was less than what they needed to pay in as an earner, and then they take it and they go blow it on something. Or because when you're a business owner, there is no refund unless this is the scenario right here. That's basically the only time that this could happen. But you have a surplus here of 15 grand. So what I would probably do would be invest 90% of that into the business. So you'd be looking at about $13,500 to put right back into the business. Whether it's more advertising, that's generally what I would be looking to do, because that's what's going to grow. And then you take $1,500, I don't know, go on vacation or take a weekend trip or something like that. Maybe a little more. It depends on what you want to do. But anyways, that makes it so that way your cash flow stays healthy and you don't have a huge, crazy, stressful thing to deal with at the beginning of the new year when you start calculating out your taxes and that sort of stuff. So I know I just blasted with you a ton of information, but hopefully now you understand roughly how income taxes work for a business. It's totally different than when you're just someone that is working at a job, because the business that you work for does all of this right here. But now if you're the one that's running the business, you have to do all this stuff. And when you start getting employees, that's when things get even more complicated, but that's a subject for another video. In a future video coming out soon, I will do another explainer video like this regarding sales tax, because it does affect your company if you're selling services or digital products to businesses. And depending on where you're at in the world and where you're at within the United States, that can affect you tremendously, especially if you're selling at a higher volume, because you have to do sales tax in states even if you don't have an actual presence there. So we'll be covering more of that in that video. But I'd appreciate if you went down below, dropped a like on this video if you enjoyed this content. If you're not already a part of the family, go down below, smash that subscribe button, and hit the bell for notifications, so that way you know when the newest content's live. And if you're interested in learning more in-depth information regarding building websites, ranking them, and monetizing them with pay-per-call, affiliate, or lead gen offers, there's a link down below to my course. And if you want to get access to the 9 most profitable pay-per-call and lead gen niches, there's a link to download that as well. So with that said, I will see you guys tomorrow in the next video.